Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, February the 14th, Valentine's Day. The year is 2023. Let's talk trading. Overcoming Mistakes, Part 2. These videos are for educational purposes only. Your results may differ from mine. Yesterday, Walmart and I talked about overcoming mistakes, and he shared a lot of what he does, and I shared some of what I do. And I think I closed what I said about overcoming mistakes is the biggest thing you have to do is not make the mistake in the first place. Let's first define what we mean by a mistake. A mistake would be not doing something on your trading plan or from your trading plan. In other words, you entered the trade, but it wasn't according to the rules that you set up. That would be a mistake. And so you have to say, why aren't you following your rules? So you're supposed to be a trained monkey. You're supposed to do what your method tells you to do, no more, no less. So right there, that's a mental mistake. Probably an emotional mistake that might be fear-based. You're afraid you're going to miss out on something. Or on the other hand, exiting when your method tells you not to exit. It tells you to wait, but for some strange reason, you're overriding your method. And once again, it might be another fear. You might be afraid that you're going to lose, even though you're up. So that mistake is you got to check your fear. Make sure that you're not fearful, because it's not good to trade when you're fearful. Now, what's another mistake? Something that we've probably all done at least once, and it's a mistake. It's just simply clicking buy when you should click sell, or vice versa. I mean, your mouse is over the buy or sell button, and then it moves slightly, or you try to rush into the trade, and that's probably just an error. You're just not paying full attention. So that's a distraction error. Now, if you're distracted, you have to figure out why you're distracted. Is it something that's on your computer, on your chart? Is that what's distracting you? Is it something outside, or in the room? You're distracted by noise, something else catching your eye? Or are you worried and concerned about something that has nothing at all really to do with trading? Something in your life. Have you been in an argument? Or maybe you're just not feeling well. You're ill, you're sick. Or you might be recovering from an injury. You might be in pain. All those things can distract you from doing what you need to be doing. So, and you overcome that by just, checking in with yourself. It's like, hey, I feel okay. Is my mind right? Am I really mentally prepared to trade, physically prepared to trade, emotionally prepared to trade? Maybe you have a little routine you go through. Maybe you exercise before you trade, and for some reason you didn't. Maybe you do some meditation. Maybe you listen to a trading video, or maybe you put on, certain piece of music or certain group, and you didn't do it. You just have to stick with your routine, especially if you've had a really good day. What you might want to do is make a note. Everything you did, everything you can remember that you did that could have led up to that day, and then you just kind of repeat it. Now, I'm not talking about if you wore your orange and black striped socks, I'm not talking about a superstition thing. I'm talking about more of a wellness, physical, emotional, mental wellness type of routine that you're into. Maybe you didn't drink your coffee, or maybe you didn't eat your breakfast, things like that. So, you have to check out those mistakes. Now with the trading plan, you might be tempted to monkey with it because of a bad day. That's a mistake. Just because you had one bad day, you don't need to throw the baby out with the bathwater. Okay? If your trading plan's been working and you just had a bad day, just chalk it up to a bad day. But don't sit there and make major alterations to your trading plan or abandon it completely. And it looks like the pound here is kind of stopping right around the launch pad, just below it. I don't know if you're noticing on this particular broker, the price is really bouncing around, so it's not conducive to trading. So, another mistake is not really paying attention to what you're trading, meaning the instrument, whether it's a particular stock or a Forex pair or particular commodity. If the behavior, the price action isn't normal, you need to recognize that and stop, because it might lead to a mistake. I mean, if it's moving, a pip or two every tick, and it normally moves a point or two every tick, something's going on, and you could get caught. And you don't want that to happen. And my broker, one of the reasons I'm making this video right at the moment is I kept getting common errors. And I tried it. I had my Wi-Fi connection, then I tried a cellular connection, and it's there's just something's just not right there. So that means I can't trade that, because it would be a mistake, because it'd be real easy to get, enter a trade where everything looks good, and the next thing you know, you're down 10 pips. I mean, did you just see it go from 28 to 31 and then back? So I put up this naked chart, and you can see that how that price is just kind of acting weird here. There was over a 2-pip move right there. So it's a mistake to trade when the conditions aren't right. It'd be like taking a boat out in really bad weather. Not a good idea. So it's just something that you have to recognize. Another mistake that you could make is not having your position size correct. And it's something that you need to check, especially if there's been a reload of the software, or maybe you're trying something new, a new EA or something. Anything that you just need to double check, because you might be wanting to trade, a mini lot, and actually you're trading 10 lots or one lot, depending on your account size. Your margin won't let you trade. Maybe your margin won't let you trade 10 lots. But, if you're supposed to be trading a mini and you're trading a lot, and you've got enough account equity so your margin's up there, and next thing you know, you're in a one lot trade, and every tick is $10 as opposed to $1. You might get caught and get killed. You don't want that to happen. So those are just some of the mistakes to look out for. I know a few traders would like to hear Walmart and I trade live today. He had to take off and do something, or been asking us to do at least once a week, do one of those live trading sessions where we just call out trades. So when you watch the video, you can see how we do it and exactly what we do, and possibly the reasons why we do it. So like right here, you can see you've got a flip-flop trade coming, but the indicator 2 is coming down. And like I said, those of you who know me back from my stock trading days out on TradeStation and eSignal and StockFetcher, you knew I was looking for an indicator that would really work, so you can make some pips. And first indicator 1 just was nothing. Then I hit on indicator 2, which is basically telling you whether or not the close is above or below the EMA 5, which is a squiggly. And the reason for indicator 2 is I was in a I think I was in a dentist's office waiting on for something, and they had a some stock trading magazine, and I wish I could find the article, but they tested all the moving averages and they said it was the best. So I went with indicator 2, or went with that when I made indicator 2, and it just seemed to work. In fact, there was one guy, I don't know if he's still around, still trading, but he swore by it. He just would ride what we call ride the dots. And even that's the name of the template here. It just, if this candle closes above that dot and that dot stays aqua, then you just go ahead and enter the trade, and then you just ride it. And there's mistakes that can be made. One is, in this particular method, is you don't wait for it to close. So you can see there it opened, it pulled down, but we can just watch and wait and see what happens. So your entry would have been right at 2130, which now you'd have 2 pips, 3 pips. Actually, I can turn on something here. I don't know why I don't have it on this particular template. Show boxes. Show labels. And just if you're curious, I'll turn on the side markers too. I call this a side marker over here. But we hit a high of, what did we hit on that one? Some reason it's not showing it. But you can see now from this particular indicator 2 level, you're up 3 pips. But I remember the entry here was 30, and that's 5 pips right there. And this is where Walmart usually likes to trade coming out of flip-flop box, but you see that flip-flop box price is already 7, 8 pips, so he would have to pass on that trade unless he saw something else that was a different method. And so you see here, once again, just taking that trade and be up from 30 to be up 12, 14, 13 pips right now. So that's the importance of not making mistakes. You pick out your method, and then you trade the method. And I was lucky this trade worked out. It could have gone the other way. But the thing is, by not rushing in, waiting for that candle to close, as opposed to maybe doing something else. And here, if you just jump in at the open, you would have taken you down a couple of pips, and then you had a chance to take over 10 pips. So, fellow traders, I hope that helps, because remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.